it's skyrocketed. So a $600 pension 10, 15 years ago won't buy much of anything here today.
And why the millennial generation is starting to give up because they can't afford to get a good job or own a house.
8 million Venezuelans voting for this assembly, saying it's actually less than 3.
It is. And people are going to start rioting in the streets.
Was reported to have asked Putin for military support that would help him stay in power.
We will make America safe again. And yes, together, we will make America great again.
And they ignore him, and 8 more years goes by till Bernie himself finally admits to his sons, hey, I've been running a Ponzi scheme.
Does its dominance mean it can use the alliance for its own ends?
Since 1981, bond yields, also known as coupon rates, have just gone down and down and down.
Federal Reserve note will be your biggest financial liability.
RTD Live Talk. We are live on a Wednesday evening, the 13th day of the month of February, and I'm excited to have another guest with us, David Moadel, joining us again from Portfolio Wealth Global. And so, as always, we had him on last time. He definitely shared a wealth of knowledge. Looking forward to having him back on this evening to also pick up where we left off at, which I think was the beginning of last year. So we're right around the same time frame. And this year should be even more exciting because there's a lot of things happening around the world between the trade situation, the markets. We got the crypto stuff. We got geopolitical stuff going on. So definitely David's well-versed in a variety of subject matter. But before we get to him, I want to take a second to acknowledge and welcome everyone into the chat. And so as always, if we have any new viewers, feel free to let us know where you're watching from via the chat. And then as well, throughout the conversation, if you guys want to call in and ask a question directly, there's a number above my head, 1-833-LIVE-RTD. That's for you to call in and to let your voice be heard, or to just ask questions and get caught up to date on what's happening around the world in these markets. So, with that being the case, let's get ready to go to the screen for the man of the hour, Mr. David Moadel. How are you doing this evening, sir?
It is an honor and a pleasure to be back on your program, Rethinking the Dollar. Hey, folks, if you're watching this and you have not subscribed yet to Rethinking the Dollar, go ahead and subscribe because listen, this is the main source of news for so many people, the main source of information. Forget the alternative media. Let's make this the mainstream media.
David, I appreciate you, my friend. I appreciate you. So, as I mentioned, it's we had you on, I think, beginning or spring of last year. So, a lot has happened since then. And so, I want to jump right into it. So, we're almost a month and a half into the new year. And it's been an interesting start. Government shut down, the way December ended in the equities market. What are some things that excites you? One, and then what are some things that concern you? Two.
Well, let's start with the concerns first, because this is rethinking the dollar, and I want people to, rethink the dollar, frankly, because the dollar, I just wrote an article on this recently at Portfolio Wealth Global, and I also write for crushthestreet.com. By the way, just to let everybody know, my name is David Moadel. I am an analyst and researcher at portfoliowealthglobal.com, where we do have a newsletter. People can sign up and get information right to their inbox. No obligation, no spam, I promise. And I recently wrote an article about how the dollar went up 8 days in a row. Mike, I'm sure you witnessed that. You observed that yourself, correct?
Yes, I did. And so,
yeah.
Okay, go ahead. Yeah, I'll touch that afterwards. Go ahead.
Okay, yeah, I just want to get into that because that is the name of this program, and it is so important that people understand what this is. They think that the dollar is making some sort of comeback, all right? And yes, gold is also doing quite well. We've got gold breaking out above that $1,300 level. That's what I'm excited about. I just want to talk about the dollar versus gold because that is an important relationship. See, folks don't even realize, they think that, yes, the dollar is down from when it was $18.95, almost $1,900 back in 2011. All right, so they're talking about a multi-year bear market in gold. But what people don't realize, especially here in the United States, where we tend to focus on the dollar way too much, is that gold is already up to all-time highs in 72 different fiat currencies. The dollar is the aberration. It's the irregularity. Yeah. Gold is not at all-time highs against the dollar for one reason, really. And it's because it's the world's reserve currency, at least for now, like it or not. And they've suffocated all the liquidity out of it. But gold is at all-time highs in terms of all the other currencies in the world, all the other major ones. And people also need to realize, I want to talk about the Fed a little bit here, because the Federal Reserve, what they have going on, they have to do quite a juggling act. They have to manage a number of different things at once, which is quite difficult to do. First, the Fed has to manage the U.S. economy domestically, which is at record low unemployment rates, or at least that's what they're publishing it as. Plus, they've raised the minimum wage for 15 million people in a number of different states. In the U.S., the economy is strong, and so there's a risk of inflation. Outside the U.S., Europe is almost officially in a recession. China is growing very slowly, at least for them. So for them, low interest rates are actually better from the Fed. So the Fed now has a tough decision to make. Is it going to favor the elite and keep interest rates low so they can prop up the stock market and stock prices? Or are they going to help out the people for once and actually raise interest rates and make savings great again? I'd like to see that. I'm sure you would too. It'd be nice if they could make Washington think twice before they actually spend our hard-earned tax money, tax dollars. Are they going to do that before inflation kicks in? So the Fed right now the Fed's on the fence, the way I see it. Is it going to raise interest rates and risk another 20% drop in the stock market like we saw in December? Or is it going to keep interest rates low, risk inflation, kill the savers, kill investors, the middle class, retirees, and so on, and potentially see an event like we're seeing in Italy right now, where the people are ready to hang the bankers by their thumbs?
And so,
it's crazy.
I see the Federal Reserve has definitely put themselves in a tight spot, because in keeping things as is going to be problematic, and then in raising it is going to be problematic, because all the debt that's been taken out will have to be paid back at higher interest rates. So anyway, in between, you're going to be caught. You're going to be in a tight bind there. But let's touch on gold a little bit. How important gold is, because we started off talking about gold. And so I know you keep an eye on different markets, especially you mentioned gold being and other currencies being priced extremely higher, or the currencies not being is worth as much, is basically what it boils down to. But what about the recent news on the reports of China's coming out with their recent numbers on, I think it's 1,800 tons or something, which we know, I don't believe that's the official number. But when we hear China, Russia are all accumulating massive amounts of gold, they obviously are aware of some things. Why is the alternative media and mainstream media starting to mention that more often, you think?
Yeah, well, they never mention anything bullish about gold in the mainstream media, unfortunately. They don't talk about gold much, period. They're talking about it a little bit now. The technical analysts are talking about the breakout because you probably know this one: the longer the base, the higher in space, right? And so would you consider all of 2018 to be a pretty long base? I would. Between that $1,200 and $1,300 range. Look, you're spot on with the fact that Russia, China, Japan, Turkey, India, they're hoarding tons and tons of gold. Do they know something we don't? Or do they just have an awareness of the fact that the dollar is probably not going to be the world's reserve currency for much longer? Just to check in, I just checked right before the program. I like to give the latest updates on the numbers. We've got gold at around 1311, which is nice. I suspected that it would retest below the $1,300 level. Hasn't done it yet. Since breaking above, it broke above it very strongly. I love that. That's huge. Silver at $15.69 ask price on spot. You got the gold to silver ratio at 84. I'm amazed that it's been in the mid 80s for so long. That's a rare thing. Ever since gold was depegged from the dollar in the year of my birth, 1971, when the U.S. government unfortunately took the U.S. dollar off the gold standard. This has only happened 3 times in the mid 80s for the gold to silver ratio. So I'm expecting silver to outperform. I'm expecting gold and silver to outperform, but silver is going to be like a rocket pretty soon. Wouldn't surprise me at all. You've got the 10-year T-note at 2.7%, barely keeping up with the rate of inflation, which is typically between 2 and 3%. I don't think it's going to keep up with the rate of inflation much longer. I believe there is going to be hyperinflation. Not to the extent of Venezuela necessarily this year, but we could see that within our lifetimes. And Bitcoin at around 3,600, you and your audience surely witnessed that day when it went up over 10% recently in one day in a 24-hour period. I believe whales and institutional investors are coming in. We can talk more about that pretty soon. But look, the only thing that kept gold and silver down, and to a certain extent Bitcoin down, because people do measure Bitcoin against the US dollar, at least in the United States, they tend to do that, was the dollar's strength. That all comes down to the dollar, doesn't it? The dollar just experienced an 8-year bull market. And dollar bull markets usually last between 7 and 8 years, typically. So I think the dollar is probably going to have a bear market pretty soon. Not only a bear market, but a really big one. It's due, because when you look, you have a populist movement like we have now in the U.S. You've got it in Europe. They want to tax the rich up to 70%. Next, when that happens, what follows generally is price controls, more government regulations, more political extremists. It's just a very risky time right now. It doesn't mean we're headed to war or conflict or anything like that. It does mean the environment is favorable to gold and silver right now, better than holding a ton of cash, I'll tell you what. So here's what I'm doing, because people want actionable advice. I'm looking to own companies that are able to beat inflation, which I do believe is going to go up severely. I look for companies that have earnings and revenues that can grow faster than inflation. That's important to me. And companies that pay a consistent dividend. I don't know if you're a strong dividend investor. I am. I love some dividends.
I haven't gotten there yet, but I'm that's why you're here. So you're gonna educate us a little bit.
You got to start looking at some dividend stocks just as a part of your safety net in your portfolio. If people want a free report on that, if you go to portfoliowealthglobal.com/dividend, people can learn about my personal favorite dividend investing strategy. It's a free report. No, we don't charge for our reports. And I'm looking at companies that want to issue their own coin, by the way. Speaking about digital currency, I'm huge on that in case people didn't figure that already. Because, look, there's this one company that's creating their own coin as an anti-inflationary alternative to the dollar. I love alternatives to the dollar. And actually, in our newsletter, we're going to profile a company at portfoliowealthglobal.com. In about 2 weeks, we're going to put it out. We're going to put out the alert on the newsletter. And it's going to be our top tokenization pick. It's not a cryptocurrency. It's a legitimate, publicly traded company. And we've been researching it for a couple months now. So I believe tokenization is going to be a big watchword this year, a buzzword. You're hearing about here on Rethinking the Dollar before you hear it in the mainstream media, which is a lagging indicator. It's going to be huge in the economy this year because companies want to avoid the destructive inflationary fiat. And the most destructive one of all is the US dollar. Consumers don't want to have to deal with that. They want something that's safe and digitized, something that's not going to deteriorate in value over time. So we're going to send out the alert on that. So people should definitely look for that one.
Definitely. Now, I want to actually, piggyback on the same thought. But for those that are just be tuning in, I have David Moadel from Portfolio Wealth Global joining us. And so we're going to be covering a variety of subject matters. And so we started off, the first question was some positives and some negatives. So I think we touched on a lot of the not the necessarily negative, but the unfortunate side effects of what's coming. Now, some of the positives, as you mentioned, dividend stocks and whatnot, and you mentioned tokenizing. And so some of the audience members here are fans of crypto, some are not. It's about maybe a 60% precious metals, 40% crypto and the blockchain technology. And so for those that are skeptical still, let's cover some bases as to why you say companies are going to be tokenizing as a way of hedging against the dollar. Share with us some positives in reference to why that should be a good thing to look forward to, and possibly some bad things that could come with a private company issuing their own coin. And will it be centralized? It's going to be clearly it's going to be centralized because it's their own, and the problems behind a central-based coin are just a little devil's advocate there. Play along with that for me.
I like it when you play devil's advocate. I love it. That helps me to bring out the argument to the people, which is that people are accepting the blockchain. You are starting to see it creep into the mainstream media little by little. Not in the way that it should, because what is the mainstream media looking at? They're looking at the Bitcoin price. And they're saying, oh, it went down from 20 G's to 3,600 something. Well, 3,200 something, then back up to 3,600. Bitcoin is not equal to blockchain. People need to get that in their heads, okay? I'm a fan of Bitcoin. I believe that's perfectly fine to hold some Bitcoin, some Ethereum. I like Ether because so many of the ICOs, so many of these tokens are based on the Ethereum ERC20 blockchain. That's great. It's safer and more secure. Companies are getting into this. It's not just ICOs. They're issuing coins because they're sick and tired of what's happened to the dollar and other currencies. I don't believe that Bitcoin has to be the only way to approach blockchain investing. There are other ways to do it. There are some great blockchain companies, which we have featured on PortfolioWealthGlobal.com, that have doubled and tripled in price. Hive Blockchain is one of them. People should check that one out for sure, HIVE. And I've spoken with Frank Holmes, the CEO, who's a brilliant guy.
I've had him on the show before.
Yeah. The guy's a genius. He's also a fantastic precious metals expert, and we'll probably you'll see him on my channel probably pretty soon again. He's a frequent guest. There are ways to approach a blockchain bullish position. Bitcoin is one way. That's fine. I don't recommend putting a ton of your portfolio into Bitcoin necessarily, because there is risk there. There is volatility. But you've got some bullish catalysts coming up soon. The BAKT launch. For people who don't know, BAKT, B-A-K-K-T, it's run by the same company, which is the Intercontinental Exchange, the same company that runs the New York Stock Exchange. So would it be fair to say they have some clout? They have some influence over the markets? Yes, they do. Okay. They own the New York Stock Exchange. They run it. They're also running a Bitcoin futures exchange that is geared toward institutional investors. It's going to draw in the whales, the big boys and big girls too, okay? So once that finally, it was delayed, they're going through regulatory stuff, that's fine. It's going to happen. If anybody thinks that a Bitcoin ETF is going to just keep getting denied forever, I believe it's going to happen this year. There's plenty of time left in this year for it to happen. The SEC, Securities and Exchange Commission, is running out of excuses to deny the Bitcoin ETF. Once that happens, what kind of flood of money is going to come into the crypto space? It's going to be huge. And you don't have to be invested in Bitcoin to benefit from that, because as they say in the stock market, a rising tide lifts all boats. Well, have you ever noticed, I'm sure you've noticed, that if you go on coinmarketcap.com or worldcoinindex.com, if Bitcoin, which I call the mothership, goes up, all the cryptos go up, right? If they're either all green or all red. I'm sure you've noticed that one. So if companies issue their own tokens, it's going to benefit from a rise in adoption and buy-in of the blockchain generally. And I'm telling you, some of these independent coins are going to take off. Not all will. That's why we're very selective at Portfolio Wealth Global. We're only picking the one that we believe is going to go very, very high, very, very soon. We rejected 99% of them because we sift through them. And yes, a lot of ICOs in 2018 did fail. A lot of them should have failed. I've seen enough white papers where they all start to look the same to me. You've got to have something special about your ICO. You got to have something special about your companies. Just like 7 out of 10 new businesses fail within 5 years. That's probably much higher than 70%. I'm sure it is with the tokens if you don't know what you're doing. But if you do know what you're doing, you can really build some wealth there. So I'm bullish on the whole industry. I'm bullish on blockchain as a technology. I don't see how you can't be at this point.
Right, I agree 100%. Now, let's touch on the equities a little bit, because December, this past December, I did several videos on just the fluctuations in the Dow itself, where it was up 400, down 800, and it was, for a couple weeks straight, it was very volatile, and it's causing a lot of panic and scare amongst just the average investor. What was going on there, and was that so-called recovery? Because I don't really pay attention to it daily, because I'm a firm believer in the end there's going to be a major dip or a major correction in that with that particular sector. So give us your rundown. What was happening in December, and who came in to prop it up, and where is it at now, and where do you see it heading throughout this year?
Sure. Well, it's interesting how anytime a Federal Reserve chairperson makes any attempt nowadays to bring the 10-year Treasury notes annual yield above 3%, the market has a hissy fit. And that's what happened. Jerome Powell, the current Fed Reserve chairperson, actually had some cojones. He actually attempted to go against the pressures of the market, the pressures of the president, the pressures of the fat cats, and actually create interest rates that were 3%, which barely keeps up with inflation. I don't know how old you are, but when I was a kid, you could get 5% yield on the 10-year T-note, and that was called the risk-free rate. Not that it's risk-free, really, but at least retirees could put 40% of their savings, if they're into a 60-40% portfolio, which is pretty normal and traditional, and they could get 5% per year without the volatility, the ups and downs of the risky stock market. But ever since Greenspan, Bernanke, and Yellen came in and pushed it down to 1.83%, was the low in 2016. Unbelievable, not even keeping up with inflation. So inflation adjusted, retirees were losing money by buying U.S. bonds. So again, a government promise broken. Can you believe it, Mike, that happened? The government breaking promises. Would you believe it?
I'm surprised.
Amazing, right? So what you have to do is you have to find those alternative investments. Bonds have always been toxic. Again, I believe in dividend investing. Mike, you got to get into this.
I will.
I'll tell you what. I'll give you the address to a report, portfoliowealthglobal.com/dividend. It's all about my favorite dividend companies.
I'm going to link it. I'm going to link it below this video afterwards so people can get a hell of that.
Thank you. I appreciate it. /dividend. It's huge. So what happened? Why did it go down 20%? The first bear market, barely a bear market, but it was 20% or more is a bear market. The first one since the Great Recession of 2008-2009. Jay Powell attempted to have some cojones and actually give retirees and savers almost decent yield, at least keeping up with the rate of inflation. Couldn't do it. The market had a hissy fit. The president threatened to fire him, and so no more cojones. Okay, he went back home with his tail between his legs and said, "Okay, I'll bring it back down to 2.6%, 2.7%, which is about where it is now." And so retirees are screwed. Savers, investors are all screwed. Now they have to pile into the risky stock market. TINA, there is no alternative, and so that's keeping stocks up. But this scheme or scam, call it what you will, is not going to last forever. It's lasted for a while, but if it's like imagine a house with cards. All it takes is one big breath of air, and I think it's a breath of fresh air because I think retirees deserve to have safe yields, decent yields. All it takes is one gust of wind to blow it all down. When's it going to happen? It's hard to predict an exact date. I'm not one of those people that's going to give you an exact date, and then when it doesn't happen, I say, oh, well, what I meant was this date, and just push it 6 months, and then rinse and repeat that process. There are people who've made a lot of money doing that. I'm not one of those guys. I am saying that if you're heavily into blue chip stocks that could be problematic, you've got to find safety nets, dividends, and I'll mention some other ones, but that is one way to go.
Yeah, very good point there. Now, I want to touch on towards the end of last year as well. I think it was November, December, the whole inverted yield curve. And so mainstream media was talking about recession. And so there's all types of indicators depending on what you look at. You can find an indicator to kind of play into the idea that we have been in a recession according to those type of indexes and graphs. What are your thoughts on recession and the inverted yield curve? Is that the true indicator of where we're currently at? Because it's usually 2 quarters behind is what we're told, but that's already in the future. So give me your thoughts on recessionary talk.
Yeah, well, that's the problem is that, yes, every time the 10-year went below the 10-year yield goes below the 2-year yield, which is an insane, bizarre situation. That's an inverted yield curve. Okay, it's inverted. It's backwards. It's not the way it should be. You shouldn't get more for your money with a 2-year commitment than with a 10-year commitment. It just doesn't make sense. So yes, you've got a bizarro backwards market. First they were the same. That's a flattened yield curve, and then it's inverting. It's in the process of inverting. And every time that's happened in the past, a recession did follow. A major market crash did follow. but it's not the same amount of time every time. And with the Fed propping up the markets again, that could throw a wrench in the works. So that could skew the outcome. I do believe it's going to happen. Again, it's a question of when, this year or next year. I don't think it could last too much longer. This is officially now a 10-year bull market. There's, generally speaking, a huge market crash once every decade. In the 2000s, there were 2 of them. So, I'd say, yeah, it should probably happen pretty soon. But again, market timing, not my bag, not my thing, because then you end up looking like a fool, because there's that old saying, the market can remain irrational longer than you and I can remain solvent. No, I didn't make that up. I wish I had. That's an old saying. I'm full of old sayings. Yeah. Okay. But no, don't try to time the markets. Time in the markets, not timing the markets. Oh no, another old saying. I'm sorry. I'm just so full of these things today. I've got a million of them.
Oh man, good stuff.
Yeah, you got to find those safety nets, because it could happen next month, or it could happen in 2 years. Yeah. But it will happen. I'm totally on the same page with you on that one.
All right, so I got a question for you, but before we dive any further, for those that might be tuning in, David Moadel from PortfolioWealthGlobal.com is joining us. And so David Moadel also has a YouTube channel at just his name. And so definitely I encourage you guys to go check him out, because I'm a subscriber. And prior to going live, I mentioned how I was watching a prior interview of his and got hip to a particular coin that did quite well. And so I'm very grateful for his guest. But you do a good job with your channel, man. So definitely, guys, go subscribe to him as well. And so, as always, if you have questions, the most important thing, there's a phone number above my head as well as his head, 833-LIVE-RTD. Give us a call and ask a question directly, or I'll get to some questions in the chat if there's any there. And so you're giving us an outline or an outlook as to what's to come. You sound like you're uncertain in the long run at these markets. And so a recession is due right now, coming up soon, whenever. What will that look like? And because of this artificial expansion that's been going on for a decade, what will that down period look like? Will it also be a quick fly-by-night, 1 year, 2 year, or could it be a possibly 10? I've heard some economists mention it'll have to double what this artificial expansion has been, which could put us at 15 to 20 years. And what will that look like in here in the United States of America, or more importantly, around the world?
I like that phrase you just used, artificial expansion. I'm gonna steal that, if you don't mind, because it is artificial. You can have it. And just take a look at a long-term chart of the S&P 500 or any major blue chip index, and you'll see how high it's gone. If you look through the 2000 crash, it went up too much, went down 50%, came back up again to that same exact level, almost exactly. 2008, 2009 came back down again, and then just shot up. It's up 300%, the S&P 500, since the bottom of that Great Recession bear market. And it's just outlandish looking, because it's a market move that is almost vertical. The degree angle on the slope is incredible. And it's not supposed to be like that. It's artificial, as you've mentioned. So the bigger they are, the harder they fall. And when you get a big, tall tree crashing, it makes quite a loud sound. And I believe it is. It's what they are going to call the reset. And it's going to be frightening. And if I'm scaring people a little bit, good, because I want people to be defensive in their allocations. I don't want people to just believe that they can go 100% into blue chip stocks and think they're just going to be fine, especially if you're thinking about retiring sometime, within the next 20, 30 years. You don't want to start off putting your money in the market and watching it go down 70, 80%, whatever it will go. If the 2000 and 2008 levels brought it down 50%, what's the current level going to bring it down? It's just going to be unbelievable. I'm not necessarily saying it's going to be like those Mad Max movies where people are foraging for food necessarily, although it could be like that. I've spoken with a few experts in growing your own food, that kind of thing, rationing, stuff like that. There's nothing wrong with that. It's okay to prepare yourself. So at the very least, prepare yourself financially, educate yourself. Read some good books. Actually, I've got a few books I'd like to recommend. Would you mind if I mention some must-reads in my library?
Feel free to do so. You can grab them if you want, hold them up if you want. Take your time. We can do that.
Okay, because I have a master's degree in education. I've taught at the high school level, the elementary school level, the college level. Not once did I see a proper financial education. They force people to learn about all kinds of weird, calculus and stuff. There's nothing wrong with calculus. It's fine if you're going to use it. But why am I forced to learn about that, but not how to balance a checkbook or how to open an investing account?
Yeah.
I've never understood that. And even though I was teaching a lot of English and computer courses, I would sneak in financial education whenever I could, even if I wasn't supposed to, because it was just so important to me. So there are a few books that I highly recommend people read. I call it required reading. The Little Book That Beats the Market by Joel Greenblatt. The Little Book That Beats the Market, Joel Greenblatt. It's a quick read, won't take you long. I know people don't have as much time as they used to. And it's a guide to just outperforming the stock market with less volatility. And so the lows won't be as low and the highs will be higher. I think it's a great way to go. Think and Grow Rich, Napoleon Hill. I'm sure you heard of that one. Probably a lot of people have. Think and Grow Rich, Napoleon Hill. It's an old book, but it's pretty timeless. Some great ideas on the difference between how this is going to sound not very nice, but how poor people think and how wealthy people think. And by poor people, I don't mean necessarily people in the lower class status. You could be perfectly middle class or even upper class and still think like a poor person if you're wasting your money, if you're squandering it, and if you think that just working yourself to death is going to make you wealthy. It's not. You've got to have money making for you at night as well while you're sleeping. Warren Buffett once said, if you don't find a way to make money while you sleep, you're going to work until you die.
Yeah.
Morbid, but this is coming from a guy who's one of the richest people in the world and has been for a long time. Let me give you one more. Let's see. Security Analysis by Ben Graham. Security Analysis by Benjamin Graham, co-authored by David L. Dodd. Ben Graham, he was Warren Buffett's mentor. So, yeah, he's a pretty smart guy. The granddaddy of value investing. This will teach you how to buy low, not buy high, okay? And definitely don't buy high like, that kind of high, right? No, but don't buy at a high price either, because then you might as well be buying high.
Yeah.
It's so tempting to buy in the green, but you got to buy in the red. It's tempting to buy in the green because then everybody's happy, everybody's celebrating, it's a big party. And so you end up being the last person of the party. And you know what happens, Mike, when you're the last person in the party? All the beer's gone, the pizza's stale. It's terrible. You end up cleaning up the mess.
Yeah.
You don't want to be holding the bag or cleaning up the mess.
Right.
We have a whole. We got a report with my favorite books. I'll give it to you right now. PortfolioWealthGlobal.com /rich books. RICHBOOKS. PortfolioWealthGlobal.com /rich books. Books to make you rich. Now only you can make you rich. But if you put that good food into your mind, the good information, like the podcast you're watching right now, like Rethinking the Dollar, when you put that good information into your mind, that's how you grow wealthy, or at least that's the foundation.
Yeah. Take that information and use it.
Yeah.
You got to use it.
You got to use it. It's not just enough to get educated. I could help you all day. Mike from Rethinking the Dollar can help you all day. But if you're not putting it into action, then it's just entertainment, which is fine. It's cool, but you're not helping your future that way.
Yeah. I agree 100%. Now, I want to touch on, you hinted at earlier that you could possibly see hyperinflation coming.
Yeah.
And so hyperinflation, as a result of this next recession, the response of monetary policy, or what's going to be the trigger, or what will be some indicators that's going to lead to hyperinflation? Because most people, Rethinking the Dollar audience believes that hyperinflation is possible, but yet majority of people will always believe that the dollar would never go away, it'll never be worthless. And so why and what can be some indicators that would lead us to believe hyperinflation is coming?
The fact that if you look at a long-term chart, see, people look at short-term charts. They say, oh, okay, the dollar went up 8 days in a row. That's massively bullish. No, that's a week and a few days. That's what's called a dead cat bounce.
Yeah.
Pull back the chart. look at the long-term chart. Look at how much value the U.S. dollar has lost over the years, over the decades, since 1971, when the government took us off the gold standard.
Yeah.
It's very unfortunate that that happened. At the time, it seemed to make sense because the government was worried about what if all the countries that had U.S. dollars at the time in 1971, more and more nations around the world were holding U.S. dollars, and they could be redeemed for gold at that time. And the concern at the time was, okay, what if all those countries all redeemed, all said, give me some gold for our dollars? What if they called it in all at once, and we would be screwed? Okay, because there's only so much gold to go around. So it seemed like a good, stopgap measure at the time. But look at the ravages it's had on the U.S. dollar since then. It's a fiat currency. Fiat meaning because we said so, because the government said so. Fiat means an order, a command. We command that this is worth something, but it's not. I also just wrote an article about how we just, and I'm sure you and your audience knows about this, the United States national debt just reached a milestone. 22, I'm sure you know this number, $22 trillion now. So it was $21 trillion for almost exactly a year. Here's the thing, $22 trillion, what's the big difference between 21 and 22? It's just another number. But first of all, we can't pay it back. It's beyond that point. But the rapidity, the pace at which each new trillion is being added to the U.S. national debt is staggering. It only took a year to go from 21 to 22. What is 23 trillion going to happen in 6 months? Is that how it works? And then 3 months after that? When that much debt accrues, and we're paying about $1 trillion per year interest on the debt, $1 trillion a year interest on the debt. That's not even the debt. That's not the principal. Okay, so we're swimming in debt. We're drowning in debt. What that means is that there's no way we can pay it back. Other countries know it. They're loading up on gold because they know what's coming. You mentioned it yourself. Russia, China, India, Pakistan, Iran, because they're trying to avoid sanctions. That way, sure, I get that by dumping the dollar and loading up on gold. But again, these countries, they're not dumb. They see what's coming. They see what's ahead. Could we get to a Venezuela, Argentina, Zimbabwe type of situation? You ever see that the Zimbabwe, was it a $1 billion bill? I believe it is.
1 trillion.
They actually had that.
1 trillion. It's 1 trillion.
$1 trillion bill. It's actually, I saw that about a year ago. It was humorous and yet sad at the same time.
I went and bought the whole line of currency. So, but David, watch this. We got a caller online. Let's see what's going on here. Hello, caller. What's your name? Where you calling from?
This is Russell from Missouri.
Russell from Missouri. How you doing this evening? What's your question? What's your thoughts for David Moadel?
How you doing, Mike and David?
Doing well.
Very good, sir.
Good to hear that. My question is with the amount of debt that we have and the inability, obvious, to pay this back, when we do a reset, will it be a total reset? And what will be the currency that we use? And if not, how long will it take to even, to pass out whatever they're going to use, the gold, the silver, whatever, and to get back to a normal society?
Good question.
Oh, boy.
Thank you, Russell, for calling.
You want me to take a shot at that first?
You go ahead, and I'll share my 2 cents at the end. Thanks, Russell. Appreciate you calling, my friend.
Yeah, thank you, Russell, for calling in. Everybody should call in and give me your questions. I love the interaction here. This is really cool.
Definitely.
What's it going to look like when the dollar is pretty much worthless? Rob Kirby, who I'm sure you've heard of, a big gold and silver guy, big anti-fiat guy as well. I had the chance to speak with him. Said that all fiat currencies go to their true value sooner or later, which is zero. And I believe in that. And the dollar will probably get there quicker than most currencies because the Chinese are pushing the petro yuan, which could be the next world reserve currency. It could dethrone King Dollar. So that could precipitate it. So what's it going to look like, Russell wants to know? Well, look at Venezuela. Look at Zimbabwe. Look at Argentina. You'll get a little glimpse of it. You start to see more uprisings, more populist uprisings. I mean, we're seeing populist uprisings in Europe with the yellow vests right now, but that's not over currency devaluation. That's over regulation from several ineffective governments over in Europe. Different story entirely. We can go into that if you want to, but look at what's going on over there, and you get a glimpse into the possible future if we don't stop this crazy spending spree, which I don't see we will. I mean, governments have no reason to. They're going to kick the can down the road. They're going to put it off to the next one, because why wouldn't they? Yeah. The elites are going to be fine. Yeah. they get to live in their comfortable environments, and I'm not talking about any particular party here. It's the Republicans, the Democrats, and everything in between. All parties are party to this malfeasance that's going on. So take a look at what's going on in those countries and then say, okay, could this happen here? Yeah, it could. And it could get really bad. And then the economic crash turns into a political instability type of situation. And now you've got to wonder whether you're even safe on a physical level and on having your basic needs met kind of level. So if I'm scaring people a little bit into taking action, then hey, that's not such a bad thing.
Right, I agree. So let's know we have another caller. Let's find out what the question is, and I also got some stuff in the chat we'll get to. Hello, caller. What's your name? Where are you calling from?
I'm low blood pressure.
Low blood pressure. How you doing?
Christi, Texas.
How you doing? From Corpus Christi, Texas. What's your thoughts or question for David Moadel?
Okay, I have a question.
Okay, go ahead.
I'm hearing an echo, so I'm going to say something up loud.
Okay, it's probably from you're probably listening to us as you're talking, so you're hearing back feed for yourself. But go ahead, we hear you good.
Okay. Well, in hyperinflation, the stocks they don't inflate with the money. So why would I be in stock or any paper asset when inflation comes? It'll be worthless.
Okay, so the question is, when hyperinflation hits, why be in anything paper related? Because it's going to be worthless or devalued heavily.
Understood. And you don't have to have a lot of stocks. That's true. But you can have some, because what I'm talking about, what could happen, it's not going to happen tomorrow. And so if you sit and do nothing and wait for things to happen, you could miss a lot of opportunities. So I'm not saying be 100% out of the stock market. Well, I can't tell people what to do, but I'm saying that for me, I'm not 100% in the stock market either, or out. Okay, you can be somewhere in between. If you waited for things to happen and were not allocated anywhere over the past 10 years, you would have missed out on some gains. Let's be honest about it. So you don't have to be totally out and live. I don't want anybody to live in fear. Totally. Okay. By the way, I'm going to throw a couple of quick facts at you. This is kind of interesting. The US dollar has lost 98.2% of its purchasing power since the year 1900. 98.2% of its purchasing power. So you want to talk about pulling back the chart. That's pulling back the chart way back before any of us were alive watching this, probably. But that just goes to show the dollar can have these little dead cat bounces like 8 days in a row. That's nothing. That means nothing. It's still on a downward decline because of the spending spree that this country is going on. Meanwhile, gold has increased substantially over the past century. Okay, just look at the chart. $1,300 gold. If that's disappointing to people who saw it at $1,900, $1,300 gold when I was a kid was inconceivable. So, and also since the year 2000, gold has gone up a lot more than the stock market. Most people, again, the mainstream media is not going to mention that. So, but on the other hand, the stock market has gone up since the year 2000. The stock market has gone up since 1900. Okay. So you don't have to live in fear and stay out of all paper assets. you can have some of them. I'm saying don't just believe the hype that, a 60% stocks, 40% bonds allocation is going to be safe, because I don't believe in that.
Right, good point there. Low blood pressure. Appreciate you calling, and thank you for participating with us tonight.
All right. Thank you, Mike. Have a great night.
Thank you. Have a good one. And so, so I want to get to a couple questions in the chat. And as always, feel free to call in. I got a couple more minutes and we'll get some questions answered. And so I saw in the chat, let me see, a question. It said, where we go? As always, feel free to call in 1-833-LIVE-RTD. And let me see, I saw a question on here I want to get to. It has something to do with hyperinflation. Let me see where it's at. Okay, it says, what was the question? I'll probably get back to it. But now, so as I look for this question, now as far as allocation, of course, we're not able to give financial advice. It's more so opinion based, or what is David doing more so will be people's interest. And so looking ahead, we have a variety of demographics in the audience. We have those that are in the retirement age or approaching it. We have those that are a little bit younger and awake and aware and not heavily invested into the system. So speaking to someone who's younger, not heavily invested into the system, haven't put in enough time to earn anything or prove anything yet, and then those that have put in a lot, expect a lot, or have been promised a lot, that's two different portfolio allocations, I would assume. What are your thoughts and what are your opinion on those allocations for the younger and then the older in this current environment, based upon what you expect to be coming?
Yeah, great question. As you get older, you probably want to de-risk your portfolio somewhat, your investing account. So if you're younger, if you're 20, then if you want to put a little bit more into the more volatile asset classes, such as blockchain stocks, such as cryptocurrencies, including ICOs, such as gold and silver miners, things like that, you can have more in there. Whereas you want to probably go a little bit easier on that and maybe go into more dividend stocks, more precious metals, gold and silver. Don't forget your platinum and palladium, by the way, the often ignored precious metals out there. So yeah, and 0% bonds, because again, what are you going to do with 2.6 or 2.7%? That's barely keeping up with inflation and not for too much longer. So a nice even allocation towards those things. Another asset class is marijuana stocks, which, yes, is a paper allocation. But if you believe in the cannabis industry like I do, I believe that it has a huge future. I think that finally laws and attitudes and sentiments are starting to relax, not just in the United States, but abroad. You're starting to see greater acceptance in Europe, South America, places like that. Asia, believe it or not, is starting to loosen up in the cannabis space a little bit there. So now you've got all these states, 3 new states last year in 2018 legalized in the cannabis space. How much longer till federal? Well, President Trump got rid of Jeff Sessions. Oh, I'm sorry, he resigned, in quotes. Okay. Yeah, Jeff Sessions is gone. So that's a space that I believe is another growth industry, if people are asking where I'm allocated. I'm into both precious metals, gold and silver, as well as some precious metals stocks. If people want to know exactly which ones, we've got a report, portfoliowealthglobal.com/gold playbook, where I tell you exactly which precious metal stocks I'm into, because if gold and silver go up, which I believe they will, the miners go up a lot more. It's leverage. It's cheap, highly affordable leverage. So if you've got gold going up, 10%, the miners could go up 50%, 30%, sometimes even 100 or more percent, something like that. So you don't have to allocate as much money because you're getting that leverage. Now you got to be careful. If you don't pick the right ones, they can also go down 30, 40, 50%. But again, if you're younger, you can afford to allocate a little bit more towards those riskier assets. But also, you know what, even if you are younger, it's okay to get into some of those safety plays, the just precious metals, the physical stuff, the tangible. You can get into the dividend stocks. You can get into MLPs, master limited partnerships, which is a type of dividend stock. Look into those if you haven't already. There's so much out there. subscribe to the newsletter. I'll keep you updated personally on what I'm getting into. But whatever you do, don't just put your money into, roll it up, put it into your mattress or in a shoebox or something like that, and assume that that's safe. Forget about bonds; they're toxic.
Yeah.
Forget about going 100% into blue chip indexes. Not the way to go. Diversify, and at least you're shielding yourself from hyperinflation if it happens.
Yeah, good point. Now, so as we draw towards the end, I found a question, and so the question says, "What would be the penalty?" This goes back to the hyperinflation and the debt situation, and so it's a while back. But it says, "What would be the penalty for not paying back the supposed debt?" Referring to our national debt and all the interest and things of that nature. What would be the penalty of a national default in that category?
Yeah, well, then the first thing would happen is the dollar would not be the world's reserve currency anymore, which is a huge blow to the economic status of this nation. We've grown up since World War II, and the greatest generation made America what it is, the greatest nation in the world for many, many years. And a lot of that has to do with the fact that we're the richest nation in the world. It also helps that we have a mighty military and bombs and things like that. So that had a lot to do with us becoming the #1 world's power.
Yeah.
But we're not in an age where we can threaten to bomb people anymore.
Yeah.
Like we bombed Hiroshima and Nagasaki in World War II. We can't just do that anymore. And now, if America is still to be considered #1 anymore, which is questionable, it's because we're economically #1. But you can make an argument that it's now China that's #1. You can even put Germany ahead of us.
Yeah.
And when King Dollar dies and we can't pay back our debts, and other nations that own our debt, like China, like Japan, start to call in those debts, and we're insolvent and we're in a major recession/depression type of situation, when the economy is contracting, then we'll lose our status as the freest nation in the world, because there's no freedom if there's no economic freedom.
Right.
If there's dire poverty and people are wondering where their next meal's coming from, there is no freedom there. If there's no economic freedom, it's a pretty scary thing.
Yeah.
So what is what's the penalty? It's a way of life that our grandparents had and great-great-grandparents fought for, and we just pretty much squandered it. Think about how many brave people, gave their lives and their livelihoods through multiple wars so we could have this lifestyle.
Yeah.
And we could just lose all that. That's the penalty.
That's a good point. So we got our last caller for the evening, and so we will wrap it up with this call here. Hello, caller. What's your name and where you calling from? Hello? Anybody there?
Can you hear me?
I'm sorry. Talk a little louder. All right, now I have you there. Matt, who's this calling?
This is Tim from Colorado.
Tim from Colorado. How you doing, Tim? What's your question for David Moadel?
Yeah. Are we going to hit hyperinflation or deflation first?
Hyperinflation or deflation first?
I'll have the answer. Thank you.
Appreciate it, Tim.
Thank you, Tim, for the question. Deflation, not so much. That's not the way that's not where we're headed. Right now, yes, the dollar is having a nice dead cat bounce. Okay. Then it goes back to, again, pull back the chart. Unless he's talking about short term, I cannot predict what's going to happen, with the rate of inflation over the next quarter.
Yeah.
Because it bounces between 2 and 3%. Will it go a little bit closer to 2% or a little bit closer to 3% within the next 2-3 months? Yeah, I'm not trying to predict that. I'm trying to think long term. I'm thinking about what the next generation, the millennials, are going to have to face.
Yeah.
So am I concerned about whether we're going to deflate or inflate a little bit over the next quarter? I'm not as concerned about that. We're headed toward inflation as we have been since 1900 and since 1971. That's the way it's going to go. And the middle class, as always, is going to end up holding the bag. The elites, the global elites, they'll be fine.
Yeah.
In fact, they kind of want it.
Yeah.
Because when hyperinflation happens, think about, relatively speaking, how much wealthier a billionaire will be. His billions will be worth not as much, but he'll still be extremely wealthy. Whereas somebody who's making $50,000 a year if you're a billionaire and your fiat currency is cut in half in value, you're still half a billionaire.
Right.
If you're making 50 grand a year and now it's really worth 25,000, or if you're making 25,000 a year and now it's worth 12,500.
Right.
So relatively speaking, the wealthy will be even wealthier.
Right.
Check out this report, portfoliowealthglobal.com/DEAD, DEAD. It's a blueprint on what to do when hyperinflation hits, because it will. Again, it's /DEAD, DEAD. Check it out. You don't have to be a billionaire, but you can think like a billionaire. You can read those books I mentioned before, get the report on that, great books, and educate yourself. Don't count on the mainstream media to educate you. Don't count on the school system to educate you. They're not going to. I used to be part of the public school system. I'm not ashamed of it. I'm glad I was there, but I'm also kind of glad I got out of it. And I can come on excellent shows, amazing shows like Rethinking the Dollar, and educate the public like we're doing for free right now. So you don't have to, anybody education.
Yeah, you don't have to go into student debt. You don't have to take out a student loan to get real education or alternative-minded information is more likely what it is. So
alternative-minded education. I like it, and I'm going to use that. I'm going to use artificial. What was it?
Artificial expansion. Yeah.
Great phrase. Thank you for that. I'm going to borrow that.
No problem. Well, hey, man, David, it's been great having you on again, man. Definitely got to do it again. Probably around summertime, and we'll see where we're at that point. But as always, David Moadel from PortfolioWealthGlobal.com. I'll definitely link. I'll put some of those links in the chat as well as those books. So a wealth of knowledge has been given this evening. Hope you guys have enjoyed it. More definitely go to David Moadel on YouTube. Subscribe to his channel. And he does a great job of interviewing people as well as giving special updates or whatnot. So once again, David, leave us with some last minute thoughts on, leave us on a good note. What are some things we should be excited about moving forward?
Get excited. Get excited about precious metals. They're breaking out.
Yeah.
Gold is breaking out, but don't forget gold's little brother, silver. A lot of people ignore silver. It is still struggling below $16 per ounce, but don't count on it staying that low much longer. Take a look at miners. Take a look at the mining space. Pick and choose the ones that you've researched the heck out of, or you can borrow some of our research as well. You can get the newsletter, portfoliowealthglobal.com. Just check on the homepage for the newsletter, and get that good research. Educate yourself. Get a mentor like Mike from Rethinking the Dollar, great mentor for your finances. You can break out of this cycle that just because the United States spends money like a drunken sailor doesn't mean you have to. You can escape. You can be one of the elite, not the global elite, but one of the elite investors. You can be in the top 1%. You can get there a little bit at a time. It is possible.
Yeah, good point there, man. Good point. So as always, people, it's been great having you guys join us. More importantly, check out some links below as well as the opportunities to the side here. So one thing I'm doing here, David, is I'm forming an RTD Gold team. And so one of my big things is here, the motto is get your weight up. And so I'm actually becoming a partner with a great opportunity where people can automate their gold. So I'm looking to formulate a team of individuals that want to be proactive and just automate it. Like I personally do it to where I try not to think about it. It just comes in the mail. I'm fine. I got to think about it. And it's easy. So if anyone has interest in doing so, feel free to click the link down below and reach out to me via email. I'll get you guys information. But as always, David, it's been great having you on. I appreciate you for spending time with us this evening. Keep doing what you do. We'll definitely get back with you in a couple months and hopefully be in a better position, have more good news to share with the audience. So once again, thank you, David. Appreciate you.
Thanks a lot, Mike.
All right, everybody. Be good, be safe. I'll see you guys later.